If you're going to follow the path that your parents followed, you're not going to ever become rich. You need modern ways to make money, modern wealth creation.
How Apple makes money. Apple is the world's most valuable technological business and a revered brand. High-demand goods, ecosystem integration, premium pricing, and fast-growing services drive its success. In this video, we explore the latest financial data and research to explain how Apple generates money. 1. iPhone sales, the core revenue driver. The iPhone is the product that comes to the minds of the majority of people when they think of Apple technology. Since its introduction in 2007, the iPhone has consistently been Apple's most profitable product, and for good reason. Despite the passage of more than a decade, it continues to be the most important factor in Apple's success financially. During the fiscal year 2023, Apple's iPhone sales netted a total of $200 billion and $600 million, which was equivalent to approximately 52.3% of the company's total revenue. This indicates that sales of iPhones continue to have a significant impact on more than half of Apple's business. Despite this, there was a slight year-on-year decline in comparison to 2022, which demonstrates that although iPhones continue to be a powerhouse, their growth has slowed in a global smartphone market that is saturated. So why does the iPhone continue to generate such a high profit? Pricing at a premium. Apple markets the iPhone as a luxury device, meaning that it is typically priced higher than other products on the market. Second, Mac, iPad, wearables, and accessories. Additionally, Apple generates billions of dollars from other categories of hardware in addition to the iPhone. They are still significant revenue streams, despite the fact that none of them can compete with the iPhone in terms of scale. Macintosh computers. In 2023, Macs brought in a total of $29.4 billion, which accounted for approximately 7.7% of Apple's total revenue. Nevertheless, when compared to the previous year, this category experienced a significant decline of approximately 27%. The global PC market slowdown and long replacement cycles contributed to this drop. iPads. Apple's tablets generated $28.3 billion, making them the smallest major product line. Similar to Macs, iPads also faced sales declines due to weaker consumer demand. Wearables, home, and accessories. This category, which includes AirPods, Apple Watch, Apple TV, HomePod, and Beats headphones, earned $39.8 billion, or about 10.4% of Apple's revenue. Wearables like the Apple Watch and AirPods are particularly strong performers, helping Apple capture younger audiences and expand beyond traditional computing devices. Together, these categories account for around 28% of total revenue. 3. Services, the fastest-growing, high-margin segment. Perhaps the most exciting part of Apple's business model is its services division. Over the past few years, Apple has invested heavily in growing this area, and it's paying off. In fiscal year 2023, Apple's services business generated $85.2 billion in revenue, about 22% of the company's total, and grew 9% year over year. By 2024, services accounted for nearly 26% of total revenue. Services include App Store commissions from app sales and in-app purchases, Apple Music, Apple TV Plus, and Apple Arcade subscription services, iCloud storage subscriptions, Apple Care warranties, Apple Pay and wallet transactions, advertising and licensing arrangements. The value of services resides not just in growth, but in profit margins. While Apple's goods create roughly 44% gross margin, services attain above 70% margins. This makes services Apple's most lucrative business. Apple's long-term approach is clear. Although iPhone sales may stall, services income may continue increasing as more people join and stay in the Apple ecosystem. 4. Ecosystem and brand premium. One of Apple's biggest competitive advantages is its ecosystem. Unlike other tech businesses that generally provide single goods, Apple combines everything together. iPhones connect easily with Macs, iPads, Apple Watches, and AirPods. Services like iMessage, FaceTime, iCloud, and AirDrop make transferring away from Apple incredibly difficult. This lock-in effect implies that once a client buys one Apple product, they are more inclined to acquire more gadgets and subscribe to services. It is not only about the items, rather, it is about integrating lifestyle choices. In addition, Apple is able to charge premium prices due to the overwhelming strength of its brand. Customers are prepared to pay a higher price for Apple products despite the availability of cheaper competitors. Fifth shift towards services and AI integration. The corporation Apple is making a deliberate effort to move away from its traditional role as a hardware manufacturer. Apple recognizes that its long-term development is dependent on digital services and future technologies such as artificial intelligence, despite the fact that the iPhone continues to be an essential product. An example of this transition is the launch of Apple Intelligence, which is a package of artificial intelligence technologies that can be found on iPhones, iPads, and Macs. By enhancing productivity, customization, and the overall user experience, these artificial intelligence techniques help Apple maintain its competitive edge over competitors such as Google and Microsoft. It has been highlighted by Tim Cook, the CEO of Apple, that the business takes the strategy of not first, but best. Sixth, geopolitical and supply chain challenges. Apple faces a significant threat in the form of its supplier chain. The firm is vulnerable to geopolitical tensions, trade restrictions, and production delays, as a result of the fact that a significant portion of its manufacturing and assembly operations are in China. According to the Financial Times, Apple is very dependent on manufacturers in China for both the cost-effectiveness of their production and the technological skills they possess. However, recent world events and tensions between the United States and China have forced Apple to diversify. A portion of Apple's iPhone manufacturing has been moved to India, where the company has been investing. In addition to having reduced labor costs, India also has a vast market base and provides government incentives for domestic manufacture. Even so, moving big businesses outside of China is a challenging and expensive procedure. While Apple continues to rely on China for the time being, the company is gradually looking into other options. Seventh, tax planning and organizational structure of taxes. Apple's tax efficiency scheme is another major factor in its success. Apple has established subsidiaries in low-tax nations, including Ireland, the Netherlands, Luxembourg, and the British Virgin Islands, for a long time to reduce its tax burden. Although controversial, these methods help Apple retain profits and reinvest in growth. Apple meticulously manages its tax strategy to maintain compliance while decreasing costs, even as governments worldwide try to tighten rules. Don't forget to hit like, share, and subscribe.